Fortis, a North American leader in energy delivery. Fortis is a diversified, predominantly transmission and distribution utility owner operating 10 regulated utilities across Canada, the United States, and the Caribbean. The company serves roughly 3.5 million customers, manages a 2025 forecast rate base of about $40.7 billion and plans to grow that to roughly $53 billion by 2029. Its asset mix is concentrated in T&D, offering stable, regulated cash flows and exposure to long-duration utility investment opportunities. Fortis highlights strong governance, local subsidiary boards, and a track record of delivering safe and reliable service with improving outage and safety metrics. Fortis advances 3 interlocking priorities: 1. Sustainable growth through regulated rate base expansion, 2. Operational excellence and affordability for customers, and 3. The energy transition. The company emphasizes a local business model that devolves operational decisions to subsidiaries while maintaining centralized financial discipline. Core execution levers are preventative maintenance, targeted modernization, including AMI and IT investments, customer-focused capital allocation, and partnerships that unlock incremental load growth, notably data centers and industrial customers. Fortis positions these priorities to support steady earnings growth, reduce the dividend payout ratio over time, and maintain constructive regulatory relationships. Fortis' 2025 to 2029 capital plan totals roughly $26 billion, with about 58% expected in the U.S. and approximately 23% allocated to major projects. Investment themes include transmission upgrades, ITC and MISO LRTP work, grid resiliency, distribution modernization, LNG and renewable gases, FortisBC, and generation-related investments at UNS driven by IRP changes and the Springerville conversion. The plan is funded through a balanced mix, roughly 59% cash from operations, 30% net debt issuances, and 11% equity via the dividend reinvestment plan at assumed participation rates. The company maintains an available $500 million at-the-market program to preserve capital flexibility and uses FX hedging and cross-currency swaps to manage translation risk between USD and CAD. Fortis is transitioning away from coal and toward lower carbon generation, while simultaneously investing in grid capacity to accommodate electrification and large new loads like data centers. The company targets a coal-free generation mix by 2032 and a 2050 net zero direct emissions goal, while acknowledging that interim GHG reduction timelines will be reassessed in light of recent developments, for example, the conversion of 793 megawatts at Springerville to natural gas. Fortis also advances customer-facing decarbonization programs through FortisBC's renewable gas and hydrogen pilots, AMI deployment to enable demand response, and targeted investments intended to reduce customers' GHGs and energy use. The corporate emphasis is on pragmatic transition investments that preserve affordability and reliability while lowering carbon intensity over time. Fortis presents a disciplined, low-risk investment thesis built on a largely regulated North American utility platform, a multi-year capital program that materially grows rate base, and an explicit commitment to the energy transition and strong corporate governance. The company's strategy centers on executing a highly executable 5-year capital plan, preserving investment-grade credit metrics, and using a balanced funding mix to sustain dividend growth while expanding regulated rate base and customer-facing services. Fortis advances a conservative growth, regulated utility strategy combining a large, executable CapEx program with disciplined funding, constructive governance, and explicit sustainability commitments. The plan increases rate base materially while preserving dividend growth guidance and credit quality. Success depends on regulatory approvals, timely project execution, and the company's ability to reconcile energy transition objectives with affordability and reliability for customers. Fortis' portfolio and funding approach position it to capture transmission and electrification opportunities while managing the principal regulatory and market sensitivities that govern utility returns.